If you like copper, you should like Hot Chili, drop, mic, leave. Really what Hot Chili is, it's a company that's got the right project, the right place, the right people, and I'd say the right commodity. So I'm biased, obviously, but I have drunk the Kool-Aid on copper. And we live in this world where there's a paucity of primary supply coming from 2025. In fact, the copper primary supply starts to drop off a cliff. We need a lot more new copper to come online, but we need a copper price that incentivizes that new copper. And so for a company like us, it's our job to ensure that we keep our project in good standing. We have a very, very large resource. We have something that very, very few of our peers have, which is a water license. And as one of our colleagues in Chile says, no water, no project. And so large project, optionality of the copper price, low economic hurdle, located in Chile, I forgot to mention that. And one that we would like to not just have the commodity optionality, but also development optionality. So ultimately, you want to be advancing the project aggressively when the market is screaming for it. Okay, Costa Fuego comprises two main deposits. We're one of the rare large copper development projects in the country that is proximal to the coast. And so anybody who knows about copper in Chile knows that most of the projects are up in the Andes. And if you're in the Andes, that comes with some unique challenges, and that's around infrastructure challenges. And so we are on the Pan American Highway, 50 kilometers from the coast, have a MOU with an existing port. We have announced an agreement around electricity infrastructure. And as I mentioned before, probably most importantly, we have a water license. And that water license took 8 years to get. And so we are a project that is endowed with existing infrastructure. And that means that lowers our cost of capital and it lowers our CapEx hurdle. So large project, around $1 billion to build for an asset that will produce, when it's in production, plus minus 95,000 tons of copper per year, 49,000 ounces of gold for the first 14 years. Our development timelines are materially shortened because we have an existing water license, that's critical, and this existing infrastructure that we get to leverage off. It's a question I do like to answer. I think a lot of investors think that some jurisdictions are lower risk. So Canada, Australia, and the States are perceived as being low risk. They're not. Risk manifests itself in very, very different ways. And so Chile was in the news on the mining side when a leftist government was elected, and there was a lot of negative rhetoric about the impact that that would have on mining. Nothing changed on the ground, and there's been a strong move to the right. And in fact, the existing government, which is very left-leaning, has announced intentions to try and streamline the permitting process. And so I would say that if you are a good corporate citizen, everywhere in the world, obviously, you need to ensure that you have positive relationships with your local community. Regulatory environments differ from place to place, but Chile is definitely a country where you can advance a project if you're doing things the right way. So our primary listing is in Canada. Primary listing is in Australia, secondary listing in Canada. And so if you're a Canadian listed company, what investors get to benefit from is NI 43-101 filings. And so if you have got the time and the patience, there's a wealth of information that's in that report that's filed on our website and on CEDAR. But I would absolutely recommend that existing investors go to our presentation because that encapsulates the key data. So what that NI 43-101 report is a scoping study, PEA level study, so the first stage economic study that shows a very, very robust economic project, a project that in the right copper price environment will get built. And we have a paucity of large-scale copper projects. And a couple of things that I should touch on. It's a very, very clean concentrate. And so minimal, no arsenic. And that kind of concentrate with no arsenic is very, very desirable for traders because you can blend it with more problematic concentrates. It's a project that has no technical complexities, conventional mining, conventional processing, existing infrastructure, $1 billion NPV at $3.85 copper. For every 10-cent increase in the copper price, the NPV goes up 100 million. So we've got a lot of torque and beta to an underlying copper price. And again, I've drunk the Kool-Aid on copper, and we saw this with lithium recently, is that underlying commodity prices need to accelerate exponentially to incentivize and encourage new development. So we're perfectly positioned for what I would bet quite serious money on there being a material rise in the copper price over the next couple of years as we hit this looming shortfall in primary copper supply. So we have announced that we'll be advancing the PEA to the next level of economic study, so PFS, which is due in the latter part of the year. We've also announced a 30,000 metre drill program. And so what the Hot Chili team is very, very good at, and I'm a new entrant, I joined the board in the beginning of 2022, they're very, very good at consolidating projects for a low cost and adding extraordinary value on the drill bit. And as we know, no matter what market you're in, if you have strong drill results, you tend to get positive share price performance. And so what we're trying to do is grow the existing property portfolio as much as we can, aiming at success on the drill bit, and keep watching this page. It's very hard to thrive during a down market. Companies that will outperform during a down market are, again, those that produce drilling news. Very strong drill results will result in positive share price performance no matter what market you're in. But in a down market, as a junior, as a company that needs to access capital, I think it behooves management teams and boards to also focus on capital conservation. We have a strong balance sheet now. We announced a royalty investment from Cisco Gold Royalties last year, which was a $15 million cash injection into the company, US. So based on our last financial statements, we had approximately 20 million Australian in the bank. That's a very good balance sheet to have in these times of volatile commodity prices, and obviously commodity price and ultimately share price performance. And so if you don't have to raise money when your share price is weak, that puts you in a stronger position. And so our job is to focus on sensible deployment of capital. And by that, I mean spending money that is aiming at driving share price performance and extending out the duration of our balance sheet as long as possible until this upturn in underlying commodity prices occurs. I went and looked up what the CEO.CA community is saying about Hot Chili. Not that much, so I don't actually know what that means. Does that mean that we're just not on the radar screen? And so one thing I'd say is, and that's one of the reasons why the company is here, is getting the word out about Hot Chili. So I think that the CEO.CA community, if they go to our website, it's very, very, very good. Companies, when you're literally competing against thousands of other listed companies that are in the junior space, you need to be able to go to their information sources, and for us, it's predominantly our website, and garner everything you need to know about the company. So I'd advise you to go look at the company. Also, just reach out. It's a very, very approachable management team. And one thing that you have quite uniquely in the junior mining sector is an ability as a retail investor to connect directly with management, to call them up, to ask them questions. And so that's something that I would also encourage your community to do as well.